Legends, we are live. I hope we are live. Still trying to figure this whole thing out, hey? All right, welcome legends to the Daily Buy Show. We're going to deep dive the crypto charts and everything as it relates to crypto. 20th of November, 2025. So we've just had NVDA beat earnings. So why is NVDA important? It's because NVDA leads the NDX typically. I'll actually show you guys on a chart straight away, right? So if we, let's just look at the S&P right now. And if we pull up NVIDIA straight away, okay, what we'll find is NVIDIA will often be a good signal on the trajectory of the S&P, and specifically if we look back historically, the key thing I like to look at with NVIDIA and the S&P is the fact that NVIDIA will often top slightly before the S&P, and it'll perform often in major corrections. Historically, you'll see NVIDIA top, right? Let's go back to a few of the major ones, right? You'll see, so I'll try to clean up this chart, make it look a bit easier. Right, what you'll see is 1998, we've gone back too far. Let me get rid of Bitcoin for a moment. All right, see it here? This is going into the GFC. If we start there, right, you'll often see the S&P and NVIDIA very correlated, and NVIDIA will often lead. All right, so historically, NVIDIA has been a good gauge on the trajectory of the rest of the S&P, as is the Mag 7 in general, right? The Mag 7, oh, these charts are a mess today. Sorry, legends. Here's where you can see it. All right, you see the bearish divergence. This is the most recent correction coming into this year. This was early this year. You see NVIDIA give us this big bearish divergence while S&P is going into this somewhat of this double top, right? That was a big signal to us, or red flag, that there could be some underlying weakness. And what do we see? We did see that weakness come in. So NVIDIA is important to the rest of the market because quite often it will lead. You can see it again here, right? We got the S&P creating these highs, NVIDIA giving the bearish divergence. So NVIDIA good for the S&P, S&P good for the trajectory of the NQ good for the trajectory of Bitcoin. So you can pretty much just go from S&P or NQ to Bitcoin, right? So if we go back here, and this is my 4 charts showing Bitcoin, NAS, the DEXY, and net liquidity. If the NAS is topping and it starts heading down, well, Bitcoin's already, being that it's further up the risk curve, Bitcoin will already be topping and heading down. That's what we've seen historically, right? So I've shared this pattern before on my X and to some of you guys if you've seen some of my other content, but the Bitcoin historically tops before the NDX, okay? And then it starts distributing, and it takes approximately about 280 days while the NDX is still creating higher lows and higher highs. So why is that important for us to track right now? Well, because if the NDX starts topping sooner, right now I've got this a loose forecast of 280 days just as a guide based on history. But if the NDX starts topping sooner and starts heading down and it's heading into some type of macro bearish trend like so, then Bitcoin is just going to keep going down and it's going to head into its bear market, right? So why, again, we come back to NVIDIA. If NVIDIA is leading the S&P and the NDX, we want NVIDIA, if you want to be bullish, you want NVIDIA to keep having strength, because if it starts creating a bearish divergence with the S&P, that potentially means NVIDIA is leading the S&P down. The S&P is going to catch up, which in turn means crypto's transitioning to that bear market. And we're already seeing some of those signs, but this is kind of a tip of the hat to the bulls, we could say, the fact that NVIDIA beat, because it potentially just gives us more time, right? More opportunity to create some bullish price action. But we'll dig into that a little bit further, right? But we'll start here. So NVIDIA beat. Now, we did have FOMC minutes. That was, well, it was this early this morning for me. Wherever you are in other parts of the world, I'm sure it was a different time. But what I took from that is the fact that it looks like QT is ending in December. Now, we cannot mistake QT ending for QE. This is what happens in liquidity to markets when you get QE, right? QT ending just means that their balance sheet, the Fed's balance sheet, see how this curve's starting to come in? It just means this balance sheet should start flattening out and potentially slowly elevate, because they're stopping the reduction of assets on their balance sheet. So when you get QE, you'll see their balance sheet increase like this. And QE is just basically money printing. Okay, they haven't said that they're going to start QE, but they're winding down QT, which again just means maybe we'll get a gradual slope like this, or even a flattening. And ultimately that's good for liquidity. But again, we just can't mistake that for QE. So I'm personally not in the camp of saying that, oh, QT's ending, so that means the markets are just going to soar. Crypto's going to go for a new parabola. No. I like to look at the data and make sure we have all the right signals lining up. And for me right now, QT ending doesn't mean QE. And what we also got to couple with that is the trajectory of rate cuts. Okay, because if we look back to 2021, the formula for this massive expansion and parabola was QE plus a low rate environment. I'll throw rates up over here. Okay, so QE plus a low rate environment. Now, in the FOMC minutes, see, we're still in a high rate environment, and the trajectory is very volatile at the moment. We had with 90% certainty a month ago that we're going to get a cut in December. Now we're down to 32%, okay? And the forecasted probabilities just keep changing. At this point in time, now no cut in December, and potentially in January is our next cut, right? So if you couple that with the fact that the formula last cycle was low rate environment, so Fed's cut aggressively, as well as expanded the balance sheet, we really got to be questioning whether QT ending, as well as the rate still being quite elevated with not a clear signal or trajectory of the Fed cutting aggressively, does that mean enough liquidity is going to come in to drive a parabola? And my gut instinct at the moment, based on this data that's guiding me, is no. Okay, so these are the things that we got to keep track of, hence net liquidity is important, because net liquidity is tracking all of those things. Now, net liquidity is flat. Flat is better than in decline, I should say. So as long as net liquidity remains flat, potentially even if we get a slight uptick, that would be good for risk assets. But even if it remains flat, that could mean that we could expect potentially counter trend rallies, or those are the times where we can potentially expect a bounce, right? It's more probable that we'll get a bounce. But if we see net liquidity just continue decreasing, then we better believe that crypto is going with it, right? Because there's just no sustained liquidity. The final thing we should just keep our eyes on here is the DEXI, because this pattern continues to play out where when Bitcoin's topped and is distributing, DEXI bases and continues its macro trend higher. So if we come over here, the DEXI is up 0.5% again, right, on the day. And it keeps, what does this look like to you? Does this look like a bottom formation or a top formation? That's a bottom formation. So this is a big one for us to track. And if you tie it in with the fact that the rate cut trajectory still seems uncertain and we're in a high rate environment, well, that doesn't really suggest the DEXI is going to roll over in a hurry. Okay, so we track these key things because all of these key things are important to crypto and Bitcoin. It guides the context for if we're in a bull market, a bear market, if the regime is changing, so we need to potentially change with it. Okay, let's take a look at. I mean, all the markets closed pretty flat, slightly bullish, because the main event really was NVDA this morning. Now the Nikkei is still bullish, both on the higher time frames, on the macro time frames. Weekly still bullish, daily still bullish. So there's still a risk bid in there, but this is going to be one to watch. The NQ, I'm looking at futures because obviously the Wall Street's closed at the moment. Now this could potentially be a guide for us, telling us that tonight when Wall Street opens, it's going to catch up. The futures could be signaling us, and because it's got to catch up on NVIDIA beating earnings, right? So again, this builds a little bit of context for us towards how we can treat crypto. RTY, let's take a look at the RTY. Now, if you caught the last stream or the recording, I was talking about how the RTY is important because the Bitcoin pretty much moves hand in hand with the RTY. The RTY is the small caps index, right? And if you look at the past year, well, pretty much the whole cycle, you can see it. RTY, Bitcoin, they move hand in hand. And again, my thesis on that is RTY, I look at the Russell just to understand the breadth of capital deploying across markets, right? Because this means not only is the Mag 7 driving the markets, it means the sentiment from big capital is moving out the risk curve, which typically means Bitcoin as well. So you can see how we move hand in hand, right? So hence I do track RTY a lot, and we are at this key daily structural level. Now, this is the level where the market's potentially signaling to us that the bullish is transitioning to bearish. So hence this is on watch right now, because we don't want to see this and for it to keep rolling over, okay? Because Bitcoin will follow. It just means there's no bid in out the curve into risk markets, okay? Now, if this is also actually quite often the best place or the common place for these reversals to happen. You see how these daily primary structure lows often get swept before a massive reversal. So I never jump to doom and gloom when I see these things. You always got to think in context. The market may be showing its hand, may be showing intent. So we got to add, call it a layer of caution there, but it just means we got to watch what happens. Okay, so the RTY is on watch. You can see I've got it flagged there. Now let's move into crypto, starting with some of the crypto macro charts. Right, so let's start with stablecoin dominance. Now I'm going to jump over. Let me just grab a different chart that I already have marked up for stablecoin dominance. Where is it? Here. Let me bring this one over. Right. Now, this has been screaming red flags to us for quite a while. The multi-cycle support trend line is holding. The weekly bands right? Which are just 1221 EMAs that I've coded to go bearish or bullish. If you want these bands, just DM me on X and I'll send them to you. The weekly bands have turned bullish, and we're approaching the key range high for basically, this is a year-long range. Okay, now if you look at our last cycle end, when we break that range high, confirmed with band context after bouncing off the multi-year trend line, this was telling us bear market, right? Until we got a band cross, we broke out from the topping range and we headed back into the bull market. Hence, this is on watch. However, right? However, this to me, yes, trajectory, if it continues going up, we are moving into a bear market. However, it means it opens the door if we do get a pullback somewhere here, right? Even back into this support trend line, anywhere down here. If you're someone who is good at trading counter trend rallies, this is going to be the fuel for it. This is going to be the liquidity for it. Because essentially, this has now built up enough headroom for crypto itself to rally without an external macro liquidity bid. Okay, so this gives us some headroom to rally, but without net liquidity turning up while this is happening, it's most likely going to resolve into a counter trend rally, meaning that it's going to be most likely a lower high for Bitcoin. And for altcoins, yeah, maybe some will go into price discovery if they're already set up for it. But you just got to be prepared that this is unlikely to be a full-blown alt season. This is more likely, let's jump into the Bitcoin chart. This is more likely, I'll go to a cleaner chart. Right, this is more likely a rally like this, okay? Or even these bigger, longer kind of bear traps, but there's a lot of money to be made here if you've got a good system to be able to trade this environment, okay? So just quickly finishing up on stablecoin dominance, the things we have to be on watch for are if we just keep trending up beyond this range high, we're moving into a bear market, okay? Because this is telling us that capital is flowing out of crypto tokens into stablecoins, okay? However, it does create some headroom now for us to come down like this without external liquidity and still have some counter trend rallies, okay? So there is that to potentially trade. Now, dominance before we move into Bitcoin. Now, what I'm tracking on Bitcoin dominance is the fact that we've had the bearish cross. So the weekly bands are telling us that capital is rotating out of Bitcoin. Bitcoin hasn't got the bid. We are finding this resistance here into the bands. Now, there's two things that we need to be monitoring here. One is if Bitcoin dominance actually keeps trending up while the price of Bitcoin and crypto keeps trending down. That would actually be bad because that just is a bear market trigger. That just means capital's rotating back into Bitcoin and potentially back into stables. However, if this rallies up and Bitcoin is outperforming, that could be a bullish signal. And if we have net liquidity supporting a bid, then we could potentially get a little bit bullish on Bitcoin. But right now, as it suggests that we may be going lower, and that might set up some of those alt rotational trades. Okay, as long as it's going lower here while Bitcoin's finding support. However, if Bitcoin is rolling over, it's unlikely altcoins are going to catch a bid with it as well. But the main thing is, everything that I'm seeing, this is all setting up for counter trend rallies. I don't see yet the formula for a new parabola and new price discovery for Bitcoin. Okay, there's too many signals suggesting that we're potentially heading into a bear market. Now, whether this is a full-blown bear market like we've seen historically, or whether the actual market structure's changed because of the participants being institutions, etc., I don't know. I don't really care. We can just track the signals, and the best thing about being a trader is we can change our bias. But we only change our bias when the charts tell us to do so. So right now, the charts are telling us that any rallies that we see, there is potentially fuel for a rally, but any rallies that we see are highly likely to be counter-trend rallies that resolve in some type of lower high for Bitcoin. Okay, whether it's here, whether it's somewhere here, whether it's right up here, it's more likely to resolve into a lower high. But during these rallies, wherever it goes, right now the charts are suggesting that altcoins will outperform, especially select stronger altcoins who have good relative strength against Bitcoin. They will outperform, and you can have some fun there for sure. But again, you've got to have a good system to be able to trade this environment and understand the context that this isn't, like full port your bags into spot positions and we're heading to, like ridiculous prices. Okay, I just don't see that. Let's jump into crypto, Bitcoin actual levels. So in the last stream, we already marked up these levels. Okay, so if we just jump back out on the weekly for a moment, these are all important levels. These are the key macro levels where I see potential high time frame inflection points. And right now, considering the context that we are bearish, okay, so if you just look at the weekly structure, right, bearish, okay, that's where we broke weekly structure. So even if we come up right up to here, we need to take out this high before weekly structure can turn bullish, or we need to come up, tag the lows to bring the weekly primary high here, then take out that high, and that will turn the weekly bullish again, right? So that means from a macro positioning perspective, whenever we do get a bounce, and we'll talk about that in a minute, but whenever we do get a bounce, right now, my bias is telling me that I'll need to short that bounce. I'll be looking for wherever that fades, and my big level is going to be into this cluster here. I'm also watching the weekly bands, right? The weekly bands are a really good macro bull market, bear market signal. When we're under the bands for a period of time, the bands will cross red, and typically that indicates major momentum change when you're looking at it on the weekly. So, and then what we'll find is the bands will be resistance, okay? So for example, once it crosses, right, this is 2021 cross, resistance, so hence more context for those bigger macro shorts, but get back above the bands, find support into them, and that's where we could be seeing that macro trend shift again, right? We did get a look in on it here, right? On this last major shift that we had, where we came below the bands didn't quite cross. So when we got this trigger right here, so this is important for you guys to pay attention to, because this was the perfect trigger for weekly structure shifting. See how price came down here, created a high, came down, SFP'd this weekly level. Now, by performing this SFP here, what it told us is two things. One, that buyers are stepping in here, okay? And that implied some strength coming into the market. Now, it also, because we took out this low, it created a new primary high here. So all we had to do was flip here to be bullish, right? So when we had this sweep come in, take out this weekly, right, told us, cool, there's buyers stepping in here, we better be paying attention. The other trigger I want to alert you to is look how in the exact pivot, we have consecutive weekly lows swept. So the week that pivoted swept the previous week, hence I've marked it up here. This happens at high time frame pivots, right? So we had that sweep as well. Primary high here, bands here, bang. Look at this strong close between the straight over the bands, right? And the rest is what we saw. So that was a major reversal pattern that we saw play out there. That's the kind of thing where if we get this sort of similar pattern where it creates a weekly high somewhere around here, okay, and everybody starts shorting it, myself included, and we come down and we sweep on the weekly, okay, that's going to increase probability that this lows in, just like here, right? Sweep, okay, and then by that stage, these bands will probably be like this, right? What do we want to be looking for is we want to be looking at this high, and that's when I'll actually be bullish to go, hey, trend is shifting again. But right now, if we don't do that, okay, if we don't do this, what I just pointed out, it means that whatever rally that we get now, if we get a rally soon, or if we get this rally before doing that, it means that unless it comes and takes out these highs up here, the weekly will still remain bearish, okay? So it just creates a bearish undertone, and it creates a lot more work for the bulls to do to get us right up there. So on watch right now, I said yesterday that this yearly open, this is an area I'd consider significant for the bulls to defend, right? For at least a bounce. Because if we just take out the yearly open, does that mean this year is going to close red? And then as a sweep of last year's highs, and then 2026 is potentially our bear market. I mean, we have 3 years up. This is only 2 years. It kind of make more sense if we closed this quarter somewhere at least above the yearly open and then started the bear market historically, or then correct whatever happens next. But it just, that's why I look at that, and I think from a very high time frame perspective, we should be expecting this yearly open to be defended. And that's why right now I am willing to position, I'm not doing anything with spot at this point in time, but I am willing and looking for setups to trade long for this kind of move. Okay. Ultimately, this is where I'll start looking for my shorts again. But if we get that bounce, like I mentioned, alts should outperform. We should rally pretty hard in many different alts. But we just got to remember, it's likely to resolve to a lower high. And whenever it does, right, it's probably lights out for alts in a big way. Unless we do this pattern that I just called out before, right? Bring the primary high there, then flip it on the weekly. That would change my bias. But I'm here with you guys. Well, I'm planning to be here with you guys every day. So if we see all that developing, I'll be calling it out in the chart so we can see it. So what am I looking for right now on the weekly? Well, this yearly level's important. Start to reclaim this yearly open, and I'll be more probable. I'll be weighting my probability of that bounce coming in a lot higher. Okay, and then the other thing I'm looking for is, like I mentioned, we look for these weekly consecutive sweeps, right? And that's typically where the market's telling us it wants some type of bounce, right? See here, down here, weekly sweep again. That's typically what happens when these bigger pivots are coming in, right? The weekly will sweep. So that's one of the first triggers I'm looking for as well. So this yearly open, and I'm looking at, let's mark it out on the charts here. This is last week's low, right? So if this week can end up closing above last week's low here, right? If we can end up closing above last week's low, then next week I'll be looking for potentially swing or multi-day trades in alts, possibly Bitcoin if it gives me a setup. ETH as well. I've been looking at ETH too. That's basically what some of the main pivot signals I'm looking for on the weekly. Let's go down to the daily. All right, so daily, we're gonna experience band pressure, right? So you'll see here, the bands are now giving us, since this cross here with a confirmed bearish trend, right? That's our current daily primary high, which sits at this cluster of other key levels. Hence, that's building as a high probability short area for me that I'll be watching. But this, notice how with this bearish trend, this structure, the bands are thickening, right? Which means they're potentially gonna provide resistance pressure every time we come into those bands. Because if you watch how the bands cross, right? And I just use the bands as somewhat of a guide. They don't work good in ranging environments. They're only good in when there's momentum. But when you see the slowing momentum, I'll change the colors so that you can see it a little bit better. I'll just do this just for the sake of being able to see. When you see the bands start to compress, right, you know that trend is losing some momentum. So when the price starts coming into the bands, and say in this example down here, right, we come back down to where we had that last major pivot, the daily bands, see how we kept finding resistance in the bands, and every time we found resistance, you'd see highs swept out here. Previous day high swept, caused the peak. Here rejected immediately next day. Here highs swept out. Notice how the bands are still quite thick, right? When you find momentum is being lost, what you'll often find is the bands start compressing. See how they start compressing? And price starts interacting with the bands, not just straight up rejecting within a few candles. Right, so then when you get these crosses, you see how the bands are so compressed that once price crosses and finds support into them, you get the bands often crossing and confirming, right? That's the kind of thing I just monitor with the bands, right? So right now, the bands are pretty hectic and they're pretty thick. So even if we come into them, we're going to need to see it interaction with the bands, watch them compress, then take out the bands, and then the bands turn blue to kind of gauge momentum of any moves. So that is going to potentially be a point of resistance into those bands. We'll watch interaction as a gauge. But the daily structure, right? The daily structure is bearish right now, clearly. So to be bullish, we need to be trading up here. Now, what are we seeing? Now, down here, I'm looking at this demand cluster, because this demand cluster was the first demand cluster that led to all of this expansion, right? It was the first one out of this transitional, phase of price. So we got the expansion cluster, and it's the last cluster of liquidity, let's call it, liquidity pool, before we just slam into these lows again. So quite often, what you'll notice is when price moves like this, say it expands, has a cluster like this, right? Expands again, and then finds a top. When it wants to expand again, quite often you want to look at the last cluster. And what I specifically look at is watch all that liquidity get taken out. So what you'll find is there'll be some type of reversal up here. Okay, then price will come down here, have some type of reaction. And usually that first reaction without taking out this liquidity is a trap, We come take out all of this, we consolidate under it, then reclaim, and that's often the reversal, okay? Hence, if you look at what I just drew out there and kind of what we're doing, right? I'm watching for something like this to be playing out underneath, like we've taken out all this liquidity and we're starting to show some potential pivot signals, right? We've got consecutive days swept, but we're yet to see any follow through. Now, what I'm looking for on the daily in terms of follow through, we closed the last candle as another sweep. So now we've got 2 consecutive days of swept previous day lows, right? So it shows us that there is some type of bid trying to step in. Will the NVDA, now will that clarity or confidence coming through in the NVDA bid translate to crypto? We'll see. But we're seeing some type of bid try to work here. Now, what I'm really looking for is, I'm looking at this first candle that started sweeping everything, and I'm watching the top of that candle, which also happens to align with our yearly open and our last week low. If we get a daily close like this, okay, clearly above that point, I would treat that as an entry trigger for me, right? So if we get a candle that closes above here, a daily candle, and even last week, yearly open, that's our last week, it will be reclaiming last week's low. If we can get a daily candle here, then I'm willing to take a crack at this and hold a trade potentially somewhere into there, okay? But that's basically what I'm looking for at the moment. We're seeing some type of bid coming. We're not seeing any follow through yet, right? We've got all of this liquidity here that was never swept, right? And you've got this liquidity here that's never swept, right? So where's our major liquidity pools? Here, that's our major external liquidity on top of the primary low. I'd say this is a internal liquidity pool now, and on the bottom side, all we've got left is this, right? So we've got 2 liquidity, and you also have this trendline liquidity here, right? So if the market wants fuel, where's it going to get it from? It's going to get it from liquidity. And if it's fuel just to go lower, right, then it's probably only going to tap the internal liquidity pool. Hence, when I'm looking for trades, I always want to be on the other side of liquidity pools, okay? So I don't want to take a trade here, for example, because I could end up just being some of that further liquidity that hasn't been tapped here, right? I always try to find these liquidity pools, and that's where I base a lot of my trade ideas out of. I want to see how that liquidity is absorbed, because if we go in and if I see something like this and we take that liquidity, what we should see is, right, we should see price move up again, because if these are people shorting the market and their stops are here, it means they have to buy their positions to get out of those trades, which should push us up. Now, why I like looking for that on the other side of the liquidity pool is because that's where I'll see how much momentum there is actually from buyers still retained. Because after those sell stops get taken out, if we don't have price continue, right, or find support and then continue, if we start seeing SFPs into these highs here, then there's probably not enough demand and buyers. That's the setup I try to see to come back down. So hence, I'm watching these liquidity pools, because that's, you want to be on the other side of liquidity pools for your trading. You don't want to be, for example, you don't want to just be trade, unless you've got a good system for it, sure. But for me, the way that I trade is I want to see liquidity taken before I get into a trade. So I wouldn't be trading just here, for example, in my systems, unless I was trading even ultra lower time frames, or I'm going, okay, similar concept. We've got liquidity pool here, liquidity pool here. This is the primary structure. So this would be the external liquidity pool on the 15-minute. So if I was trading the ultra lower time frames, I'd want to see the reaction up here, and then maybe I'd take that short and I'd just be targeting back down into here. I don't know, I'm sure there's a term for it, but I just call it liquidity pool trading. That's kind of what I try to do, is I look at liquidity pools and I want to see reaction of price into these liquidity pools. All right, legends, that's pretty much my take on the markets right now. So I guess just to summarize, NVDA beat earnings is good if you want to be bullish. If NVIDIA didn't beat earnings, we'd probably see a pretty drastic sell-off. However, it's still early, so let's see what happens over the next few days. From the crypto picture, the macro structure is bearish on Bitcoin. So considering the weekly is bearish, we have to align our bias. And until we have reason to believe otherwise, my bias is that we should be macro short when the short appears. However, given the current setup, we may be in a very good area for a counter trend rally to come in. So if you're looking to play those counter trend rallies, the main thing to consider is when Bitcoin, we have to assume, or maybe I shouldn't say assume, we have to have a higher probability that Bitcoin's going to roll over. So that has to be your context when you're trading any of these potential altcoins. When it's lights out for Bitcoin, when that shoulder or when that lower high is coming in and rolls over, I'd suggest if you're trading that sort of stuff, what I'm going to be doing is getting out of my positions at that time too, mitigating risk. That's it for today's stream, legends. Thank you for joining. Please like, subscribe, and if you got something out of this, drop a comment, and I'll catch you on the next one. I'm planning to do these every day. So around the Bitcoin Open, see you then.